Today we are going to talk about a fund which is Bitcoin Yield ETF from Purpose. Ticker symbol is BTCY. And the two things which we are going to discuss today. One is about this fund and its performance. Because previously I have covered this fund, so I'm just going to focus more on the performance of the fund or the returns. And so this is the fund's website. This is called the Purpose Bitcoin Yield ETF. And there's a second aspect which is very interesting. There is someone who has actually discussed about this ETF on the YouTube, and this is the stock trades channel. This is the person expert Dan who is talking about BTCY ETF, and he says this may be one of the worst Canadian ETFs I've ever seen. So this video, I'm trying to see how the fund works, and also show you the pros and cons, and also discuss about the points raised by Dan at stock trades, and see how those points are valid or not valid, or what my thoughts are on the same. Okay, so let's get started. First, let's look at the fund. It's the Purpose Bitcoin Yield ETF. It's from the fund named Purpose Investments, and this is a Canadian fund. So you have this fund having an AUM of about $157 million, and as per the data given here, the yield is about 11%. Management fee is 1.1%, which is pretty high, and it's a currency hedged ETF, this BTCY, and of course they have currency unhedged version. There's also a US dollar version. And okay, what is the fund basically? You can definitely watch my previous video, but just to give you a summary, this is basically a fund which helps you invest in Bitcoin, and it's a yield focused Bitcoin ETF. So, so it helps you avoid the hassle of managing or self custody of the Bitcoin. Second, you can earn or yield by harvesting the premiums from the covered calls returned by the fund. Okay, and thirdly would be tax benefits, probably tax friendly features, uh, TFSA or RRSP eligible. So registered accounts can hold this ETF. However, you double check with the fund website and also with your tax accountant about this feature of the fund. And yeah, that's another feature of the fund that you can look into. And if I look at the breakdown of the portfolio, the fund basically invests in the Bitcoin, so 100% Bitcoin, and they also write covered calls on Bitcoin. So if you look at the portfolio breakdown, it shows the percentage 107.2, and they are also giving us some breakdown of covered calls. Like 5 option calls are being written, and you can see that most of them are less than 1 month, and the returns are basically like, you know, majority is 12%, and part of it is in 4%. Anyway, I'm not going into this detail right now, and because we are going to look at the my own experience with the fund. And when you look at the distributions, you can see the fund has been able to distribute 8.5 cents recently. This was paid out February 4th. Right now we are in the middle of February recording this, and I will quickly show you my own portfolio. Usually I don't do that. My own experience with this one, not the entire portfolio, but I started back in April 2022, almost like more than 3 years now. Uh, yeah, close to 3 years now. So this is basically the time I started investing in the Bitcoin yield ETF. I bought 20 units at 837, and 3 months later I again purchased 10 units at 725, and another 10 units in October 729. The price of the fund has been falling dramatically. You can even see that here. In September 2022, I bought it for $3.20. So, that's how I have been accumulating this fund. And it is basically a purchase staggered over a period of time. So when I look at my returns, like I have put all my data and then summarized everything for you. So here the fund is BTCY, and I have accumulated 200 quantity um, around middle of February, and cost is $6.07. So that makes my total cost about $1,214. And the market price currently, this is as of February 14th, 8.63 is the market price. And if I do the math, like I'm getting a market value of 1726, and given the cost of 1214, $511 is the profit that I made. However, remember that these purchases were made at different points of time, and the price return is 42% roughly, and the dividends earned were $199. So when I compare the total cost with the dividends and calculate my yield, it works out to 16.4%. So this dividend yield is my yield on my cost, not the current market yield. It's the yield on the cost on my purchase price. So when I add 14% and 16%, the total return works out to 58.6%. And this is over a period of 2 years and 11 months, roughly 3 years. And my annual return will be like close to 15.9% if I do the calculation for the annual returns. However, just a disclaimer, this is not an investment recommendation. This is just sharing my experience, and this is only for entertainment or education purpose. So keep that in mind when you are looking at this video. And this is just to show how well Bitcoin has performed. And the returns that you see in this fund is far less compared to the returns that you get from the original underlying asset, which is the Bitcoin. And the returns are actually pretty phenomenal. Like, total returns based on the price as well as the dividend, it's close to 16%. It's pretty phenomenal despite the roller coaster ride we had. I just wanted to quickly show you that as well. Like if you look at the time here when I started, like April 2022, no, this is somewhere, yeah, this is around the time I started. Like it was around $6.50, and it has fallen down dramatically. Like it went all the way to $3 and even below that. It, here you can see 2.69, 0.63. It was below $3 for a lot for a fair amount of time, and then it was testing patience basically. And after 2023, after the beginning of 2023, it started recovering a little bit, but still it was around the $3, $4 around that mark. And in 2024 is exactly when the big jump happened. Why that happened is because the Bitcoin halving took place in 2024. That's why you see that big jump there. And later on, it again narrowed down and stabilized around that range. It was range bound, and then recently it has gone up to $8 and 863 as of now. This is where I stand. So that's the whole gamut of underperformance and roller coaster ride that I went through. So during this period, you can imagine how difficult it would have been. And the reason I was able to manage during this time is because I had strong conviction in the performance of the Bitcoin, and this was only a small portion of my portfolio. It's hardly 5% of my portfolio. So it was not an issue or a major concern for me. Of course, I was concerned a little bit, just like anyone who holds a stock and sees the price going down. You will obviously be concerned. So I'm not trying to say don't be concerned, but you should be concerned. But in that period, I was holding on to it because it was a small portion of the portfolio, and I had the strong conviction that once that recovery happens, it would be good. And at the same time, I was also able to harvest and earn distributions because the fund was able to write premiums, write covered calls, and generate premiums. That's what makes a lot of difference. Okay, let me quickly go through again here. I will just look at the performance here once again. And this shows the performance over a period of time, 1 month, 3 month, 1 year, 3 year. But let's look at the yearly or performance so you get a real picture here. So when I look at this here, like the fund started back in 2021, they lost big time. And 2022 also lost big time. And this is where I also lost big time in 2022. 2023, then the recovery happened, but compared to how much I lost before, it was not that helpful, but I could see some kind of recovery. And in 2024 is when the actual recovery and break even happened. And I was able to make some profit on my position, and my cost also recovered. Plus, I was able to earn dividend yields. So this is the whole you know, time period where you have seen like 1 year you saw minus 63%, then above 100% returns. The other year you see 94% in 2024, and now as of now it's 8%. Like we are still at the early stages of the year, and when you look at it even month on month, like you can see a lot of negatives and positives. Like there are times when there's a huge fall in the price. Like in June 2022, it fell down by 40%. And this is all due to the movement of the Bitcoin price. The underlying asset goes up and down. And you can see even in June 2024, it's minus 10.3%. And April 2024, again, 15.83%. See, these kind of up and down movement in the price is something which is common in Bitcoin and in cryptocurrencies. You can see in February 2024, it went up 38%. So these kind of volatility shocks are the kind of drawbacks that you can face. And sometimes it can be positive because you can even see positive bump up in prices. Okay, so that's the pros and cons that you have to live with. Okay, there is a video by another YouTuber or another expert. The name of the channel is Stock Trades, and the person named Dan, he made a comment on this fund, and he says that this is one of the worst Canadian ETFs. And I wanted to cover uh, my perspective on this aspect, and also give you a general view, uh, which is more balanced. Not trying to say that fund is good or bad, but giving you both sides, and you make the decision how you want to go with it. So let me go to the pros and cons first. So pros and cons, pros we are already familiar. It gives an this fund gives an option to investors to invest via the Bitcoin fund rather than owning the Bitcoin wallet. And second, it is eligible for registered accounts. And third, you can earn premium from volatility of Bitcoin. Since we already discussed this, I am just quickly, summarizing this. And cons, this is where we have to pay attention. And there is a high fee, management fee of 1.1% the fund is charging. And it can underperform due because the fund can actually have a limited upside. So when the Bitcoin, let's say, goes up 50%, the fund may not go up 50%, like it may probably go up 20%. I'm just giving you random numbers. This is just an example. And the third point, on the downside, when Bitcoin price falls or goes down, there is no downside protection. So just to clarify, covered call strategy does not provide downside protection. It helps reduce the volatility. So in the income that you are getting from the covered call helps when the price turns negative, and whenever the price is like flat, like it's not going much up or down, it's very range bound, you are still making the premium income, which is yield for you. And that yield is like an income for you, and you're uh, still you're okay because you hold the asset and the price is almost the same, and you're still getting yield. But in the case of holding the original asset, you are just broken even, but you don't have any income. But when you're holding a BTCY, you have the income aspect as well. That is something to keep in mind. However, there is a small trade-off here. When you are um, selling a covered call, you are giving up further upside. That's the disadvantage, and due to that, you are limited in terms of upside, and also you're taking a downside risk, and for that same reason you're getting paid the premium. Okay, so people who are already familiar with covered calls like S&P 500 covered calls and individual stock covered calls, people investing in yield max funds, you are already familiar with this. But people who are investing in Bitcoin ETF, like you need to be a little bit careful because you want to make it a small portion of your portfolio. Okay, I want to go back to the argument made by the YouTuber um, and the expert from stock trades. And see, he's saying that you are assuming 100% of the risk without enjoying 100% of the upside. So that's one of the key points that Dan is mentioning. And I agree with that actually. But this is true with stocks too. That's my argument. Is this not true with stocks? Answer my question. Like you can put your answer in the comment section or in my uh, at the bottom, like if you don't agree with this. This is true with even gold or any commodity. But even though that we may not go to zero, but there is always a risk of an asset going to zero theoretically. With stocks, this can happen even practically because there are a lot of companies which went bankrupt and things would have been worse with these companies. And it may not be exactly zero, but you are still losing like 90%, 80% of your capital, which means like you are completely losing. So that risk exists with stocks. Like you cannot deny that. And secondly, even if you have a covered call on top of a stock, your upside is capped and you are still exposed to the 100% downside. So the covered call strategy itself is not wrong actually. Covered call strategy is only a tool to help you manage your risk in the underlying asset. A covered call strategy is not a magic wand that will help you completely wipe off your losses or wipe off the issues with your underlying asset. So whenever you are investing in a covered call ETF, you have to remember this. You need to be confident and you need to have a positive conviction about the underlying asset. That's number one. And number two, you need to be familiar and knowledgeable about the risks and returns from the underlying asset. So if you have these two, you know the risks and returns and you have strong conviction on the underlying asset, then you can buy the covered call fund which invests in that asset and write covered calls on that asset. So stocks with covered call will have upside capped and 100% downside. And the reason why this is happening because you are writing the covered calls, you're writing off the upside at that point. And for that risk that you're taking, the 100% downside, you're being paid the premium. The call option buyer is paying you the premium because you're taking the 100% downside and you're taking the limited upside. So that's how the options work, option contracts work. So having said that, now we know all the pros and cons. Now how we know how it works. Now it's up to you to decide like whether you want to invest in this fund or not invest in this fund. And whichever way you decide, it's your own decision depending on your risk profile. You can also take advice from your financial advisor or review the entire portfolio and see how much you can invest and make sure that it's not a major portion of your portfolio. You can go up to 5% of your portfolio if you're starting off or you're unfamiliar with this. And once you're familiar, once you know how things work, you may want to expand a little more. It's a completely your personal decision. And last point which I want to make here is I'm not trying to endorse or promote this fund or anything like that. This is just my own observation based on my own experience. And I hope you like this video. Please keep watching and please share your comments or feedback at the bottom. And if you like the video, please hit the like button and subscribe for more updates. Thank you so much. Happy investing.